Hello, fellow Rebel Capitals. Hope you're well. So, I wanted to do a reaction video on the hot topic of the day, the hot topic of the week, for sure. Maybe the hot topic of the last couple weeks. That's the Nvidia earnings report. A lot riding on this one, that's for sure, especially since we've seen a little bit of the air come out of the AI bubble. And what's interesting about this is they've got to beat expectations by a mile. And that's just my opinion. We'll see how it plays out here. I think they're going to report in about 7 minutes. So I just wanted to do this live so you could see my reaction, and more importantly, how we could see how the market reacts. Like, what's the price of Nvidia going to do? What's the S&P 500 going to do? Maybe more importantly, what's the bond market going to do? So let's remember why this is so important is because Nvidia has become about 8% of the S&P 500 because it's a weighted index. So, and this really is important for passive flows, because if $1 of passive, an indiscriminate buyer, goes into an S&P 500 index, 8 cents of that goes to Nvidia. So Nvidia gets 8 cents out of every single dollar that goes into an S&P 500 index fund. I mean, it's almost like a self-fulfilling prophecy, where on the way up, it looks great. It's a huge tailwind for Nvidia. On the way down, it like it's like going downhill and then flooring it in your car. So you already have a quick pace due to just gravity, and then you just gun it in addition to that. That's kind of what it would mean, because if we see the passive flows change to where instead of net inflows, there's net outflows, well, then it's the opposite, right? Then 8 cents out of every dollar comes out of Nvidia. Now, I'm not saying we're at that point. My buddy Mike Green has studied this 1,000 times more than I have. And I had about a 2 or 3 hour lunch with him in St. Bart's back at Hughes deal, maybe a month ago or something like that. Or maybe it was 2 months ago. And Mike was talking about how his models show that it's really about the unemployment rate. If the unemployment rate goes up to 5.5, 6%, then we could see net outflows. There's some other things that could lead to it, but that's kind of the biggie, right? Is the unemployment rate. But anyway, getting back, that's why Nvidia is so important. That was the main takeaway there. And as Nvidia goes, it's really tough. If Nvidia takes a big hit, it's hard for the S&P 500 to really stay elevated. But if Nvidia just crushes it and goes up by 10%, probably going to take the S&P along with it. And before we get, let's see, we've got 5 minutes here. Okay, let's see what markets are doing right now in expectation. So we start with, I think, the most important thing. That's the bond market, treasuries. So the 2-year treasury up a little bit, kind of bouncing around all day today. Up 1.3 basis points. So yeah, about flat, I guess. 10-year, 2 basis points. So not much. A dollar. Whoa. Didn't see that one coming back in April. Now, if you guys watch this channel, you know that this is kind of what I was predicting, but it took a lot longer than I thought. I thought this thing would snap back. Let's go to a chart here just for the fun of it. This is a 6-month chart. And when it came down, you guys remember that after retardation day or liberation day, whichever you choose. After retardation day, the dollar tanks. It goes from like 103, maybe 104. And it just goes down, down, down. I thought it would snap back because what happens, the way the global monetary system is set up, all these dollars, most of these dollars are lent into existence. And they're very short term, by the way. These loans aren't like 30-year mortgages that create the dollars that circulate outside the United States. So I thought that, okay, the dollar goes down. That's great. But if things tighten, which I thought they would due to the tariffs, then that means there's fewer dollars circulating. And what that means is you got to sell assets on your balance sheet, local currency, to get the dollars you need to pay down the dollar denominated debt. And so I would see a dip down, but then I expected we'd have kind of a snapback, maybe not to where it was, but kind of up a little bit, well, to 100. That's kind of what I thought. And we kind of got it right here, but we're seeing it play out. I did not think it would take 6 months, though. Didn't. So I was right about the move, but really wrong about the time that it would take to get back to that 100 level. We'll have to see if we stay here consistently. I mean, that's the trend right now, but have to see how it plays out. What's interesting is to juxtapose this to the actual narrative that the dollar's crashing, foreigners are dumping dollars, and all these things. And although the dollar is absolutely losing purchasing power to goods and services in the United States, that's not really the argument for the dollar crash crowd. The dollar crash crowd is it loses value relative to everything, including gold and Bitcoin. And how's that been playing out lately? And other foreign currencies. So we go back to maybe a year, it's down. I mean, we're really high. But then if you zoom out, it puts things into perspective where this goes back to 1990. 1990, we were in the 90s as far as the DXY. And today we're at 100. So call it 35 years later, the dollar's actually higher. And think about what happened during that time. Everything that the dollar crash crowd thought would happen. I mean, they got that right. Deficits exploded, debt exploded, QE, fiscal spending, all of that. It all happened in spades, probably to a greater degree than they were even expecting during the 1990s. And yet the dollar went up against other foreign currencies. And why is because of the mechanics of the global monetary system. All right, let's shoot over to CNBC because we're right at 3:59. I don't know if they report right at 4 o'clock. I'm assuming they do, but let's kind of scan the homepage of CNBC here. Live. Okay, so let's go to live updates. So NASDAQ looks like it was up 0.8% today. I think a lot of that had to do with Google. Oh, you know what's interesting in regards to Nvidia is I was watching Bloomberg at lunch today, and they're saying that what's really interesting about Gemini 3 is that it isn't as dependent upon the Nvidia chips. It might not even use them at all, or it was trained on something that didn't require Nvidia. You know, I'm not an expert on the underpinnings and the technology of AI, but from what I gather, that's what made the Gemini 3 launch such a big deal. And by the way, we're talking about how Nvidia is 8% of the S&P 500. The Mag 7 is like 35-40%. I mean, it's completely bananas, which basically is the AI trade, right? So the AI trade has problems, and it's going to be tough for the S&P 500 to stay afloat, even with the tailwind of those passive inflows. Let's refresh here. So, you know, it's going back to, maybe they haven't reported yet, but what's crazy is you look at the dollar over the last month or so, dollar's gone up, not much though. I mean, just, it was at 98.9 and now it's at 100. So it's gone up slightly. But what's kind of wild is over the last month, interest rates, yeah, I guess they're up slightly too. Okay. So that's actually a good thing. That's a good thing. You want to see that happen. What we don't want to see, and what is a big red flag, is when yields are going down and dollars going up. That's when you're in the no bueno zone, because that's when you get the message from the market, the signal from the market that it's all about risk off. Okay, let me refresh. Rebounds ahead of earning report. Okay, when does the earning report come out? I thought it was 4 o'clock here. That would be ironic if I got the time wrong, because I asked AI when the report came out, and AI said that it was 4 o'clock. So I kind of be a little A little funny there. Okay, this is breaking. I don't know if that stocks closed higher, snapping losing streak. Okay, yeah, we got that. We got that. That's pretty crazy. Did that say, Josh, did you see that pop up right there? Oh, Josh isn't here anymore. I thought I saw a pop up there on CNBC saying that it was $59 a month to be a premium member of CNBC. What? That is crazy. And I'm just going to do a shameless plug here. It's $97 a month to join Rebel Capital's Pro. And you get direct access to yours truly, Chris McIntosh, Brent Johnson, Patrick Ceresna, just to name a few, along with, I think, the best research on the planet Earth, model portfolios, and everything else. That's 97. I can assure you it's a hell of a lot better than CNBC's premium service. Like, who would you rather have direct access to, Jim Cramer or Brent Johnson? Or Chris McIntosh? Or, yeah, come on. All right. So we're waiting here. Waiting. Let's go. Report. I saw pictures last night of Jensen at the White House with Musk and a couple other guys. And the talking heads on Bloomberg were saying how that's unusual that you see these tech CEOs having so many meals with like the head of Saudi Arabia and Trump and all these things. But that just tells you the world we live in right now is all about crony capitalism. It's all about crony capitalism. And Trump loves it. He loves the fact that these CEOs have to come to him and ask permission for everything. I mean, for a megalomaniac, that's like his dream come true. And regardless of what you think of Trump, you got to admit he's a megalomaniac. And so I just thought it was very telling that Jensen, the day prior to this big earnings report, was at the White House. It just shows you where his priorities are, because sucking up to Trump or the political elite is far more important than just one earnings report in today's day and age. Now, normally, if we were in a free market, that would not be the case, because the government wouldn't have its hands in everything like a puppet master trying to centrally plan every turn left and turn right. So we're not getting any updates here. You know what's the real-time data is often Bitcoin, the price of Bitcoin, because it's just always trading. So if it goes up real fast or down real fast, usually the price of Bitcoin gets the news before it hits the tape on CNBC. So let's go over there. And trading down on the day, big time, as you can see, under 90, but not at the lows. Not at the lows. I think intraday it got, yikes. Yeah, intraday it got down to 88.5. Whew. That's a big move down. And unfortunately, the chart on Bitcoin does not look good. And I know if you're a long-term hodler, you don't really care. But I think even if you're a long-term hodler, you care what the price does in the near term. And I'm no technical analysis or analyst, but looks like you're getting support here. It's not that great at 82. So I wouldn't be surprised if we get down to that level before we see a bounce. You know, I see a lot of people, even in Rebel Capital's Pro, a lot of our members say they look at value and they're like, well, I should buy. And I'm the first one to say you got to buy things when they're cheap and sell them when they're expensive. But I don't like catching a falling knife. So for me, that's where the charts really come into play. I don't want to buy something when it's going down. Now, I don't want to buy value, but not when it's going straight down. I want to buy value when it's flattened out or you got a little bit of an uptrend. Like with gold is a good example. If we go over to, well, we're waiting here. If we go over to gold, as most of you know, we look at this chart, and I'm really bullish on gold long term. I would say 3, 5, 10 years, etc. But you know, it peaks out at 43 4,300 roughly. And then we pull back, and right around here or so, I sold my gold holdings to take it down to about 10% of my portfolio. It was a lot more because the price had gone up so much. And since that time, I'm happy to just sit on the sidelines. It's just kind of, now I'd love to get back in, but I'm not going to get back in and while it's just doing this. I would get back in once it breaks through this all-time high, and let's say it sustains at a level above 4,300 for like 3 or 4 days. Then I want to get back in, because what you're doing, sure, you're missing a little bit of this spread right here, but you're also reducing the probabilities that you ride it down to whatever the hell it goes down to. And that again, trying to catch a falling knife, I don't think that's a real good strategy. At least for me, it hasn't worked. It's worked much better for me to have something I like and then wait for the chart to tell me, okay, now is a good entry point as far as the probabilities when the trend changes, right? Okay. Well, this is kind of fake news. I don't know. Maybe you guys can tell me if I got the time wrong. I thought that they were reporting right at 4 o'clock. Let me know in the chat. Oh, it was 5 p.m. Eastern time. See, I thought that they were going to do the press conference or the call, the investor call at 5. Oh, Joseph is saying 4:20. I don't know if he's just saying that because he's a fan of smoking weed, maybe. No, everyone's saying it's 4:20. Okay. So either everyone on the live stream right now is a big fan of smoking weed, or it's actually we're all stoned out of our minds sitting here watching the Nvidia earnings call. Blaze it. There you go. No, really, it is 4:20. All right, it's 4:20. Okay, well then we've got 10 minutes, 11 minutes. So I'll hang on. I was only planning on doing a live stream until about 4:15, but I'll hang on just till 4:20 to see what it is, and maybe discuss it for 3 or 4 minutes, and then I'll sign off. And then tomorrow morning, I'll probably do a video on what the earnings call is all about and how it moved markets. Up, down, sideways. I would be surprised if it's sideways. There's so much focus on this particular earnings call that yeah, I'd be surprised with sideways, but who knows? At the end of the day, there are no certainties. There are only probabilities. So let's go back and see what rates are doing here. Oh, you know what is interesting while we wait that I didn't have a chance to do a video on today, but if I would have had time, I definitely would have. And that's the minutes from the last Fed meeting came out, which dramatically changed the probabilities of the Fed actually dropping rates the next meeting. So check this out. Let me do the screen share again. Whoa, not that one. There we go. That's the one I want. And let's shoot over to the CME group. Let me refresh. This is Fed Watch. So this is going to give us the odds. So starting this morning, it was about 50-50. You see 1 day ago, right here, 50-50. And we got the Fed minutes out that said there was like quite a bit of division within the Fed officials as to whether or not they wanted to hike or pause, excuse me, not hike, but pause or drop rates in December. And so the market perceived that to be very hawkish. And that's why you saw a big change right here. Now, what's wild is you did get an uptick in rates, but not that much. Not that much. So it seems like the treasury market's kind of blowing that off. You had a knee-jerk reaction, which is not unsurprising due to the algorithms. I think algorithms play such a big part in how these markets move. Like they're programmed to, whenever a bit of news comes out, they're buy or sell or hold or whatever, and they do it across all assets. So you see almost the exact same moves in the 2-year as the 10-year. I'm similar looking charts. So my guess is it's just algorithm. You get hawkish report from the Fed minutes, then sell, 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 and then kind of the people who are actually thinking in the markets, not just algorithm trading. They're the ones like, I don't know, kind of offsides that was already priced in, and they start to buy, and you usually get the yields kind of going back down to where they were prior to the news coming out. I see that happen over and over and over and over again. It's not just with the treasury market; it's with a lot of stocks. It's with the S&P, NASDAQ, pretty much everything that I pay attention to, really. Even the dollar. Even the dollar. Let's go back to the dollar because I'll bet. Yeah, I don't know when the Fed minutes came out, but even if it didn't come out at 8:21, I'll bet you some insiders got the intel. Because let's be honest. I mean, you think that JP Morgan doesn't get the Fed minutes prior to it hitting the market, at least like 4 or 5 hours? I mean, of course they do. JP Morgan does, all the insiders, the big banksters, they get that intel in advance so they can just front run it. That's why every single quarter, when you look at JP Morgan or Goldman Sachs, their trading profits are always like, trillions of dollars, not literally, but it's like 90% of their profit comes from trading. And you think, in fact, a fun story is you guys know my buddy Steve in St. Bart's, who's one of the best traders, maybe of all time. And he started his career managing money, hedge funds, and trading in Japan in the late 1980s. And then he was, made tons of money on the way up in the bubble of the .com, and then on the way down in the GFC and commodities and emerging markets. I mean, he's the OG of the OGs. And he believes that going back to these algorithms, that they really are influential, especially in the short term with what happens. And so he is trying to pay attention to these things more and more and more often. And he's actually making a lot of money because he will fade it sometimes when he sees that move in a particular stock that he follows. And he'll be, I've been with him while he's trading. He's like, oh, look, this thing's going straight up. Oh, that's just algorithms. They just know that there's a lot of retail on the buy side, let's just say calls. And what they're doing is they're driving the price down to get all these guys to sell. And then they're taking the opposite side of it, and they're just completely manipulating the market. And then sure enough, it just kind of does exactly what he thought it would do. It's just it's wild. It's really wild. Different game for sure. Oh, let's see. Nvidia earnings. Yes, I'm just reading some of the people in the chat. JP Morgan. Oh, what I was talking about was front running there. And that's another thing that Steve has always said. He's like, it's very, very difficult to have an edge. And if you read the Market Wizards books, one of the conclusions is that it is possible to beat the market, but it is extremely, extremely challenging. And I remember one time I was, I think we were over at Hughes and we were having a beer, and I was asking him, I'm like, if 99% of the trade, I know we got retail in there, but even he was talking about how 99% of the guys that he started with or he saw as professional traders on Wall Street throughout his career, even they failed. And I was like, okay, well, Steve, how does that work? Because almost every single time I hear an earnings report from one of these big banks, they make hundreds of millions of dollars, almost billions of dollars sometimes in trading. So if they're not that good and 99% of them fail and they don't have an edge, how the hell are they making all this money? It's like, oh, that's easy. They're just front running retail. It's fees and front running. So it's basically insider information. And I'm like, okay, well, that makes sense. He's like, there, and he says, on their actual trading, what you would define as trading, he goes, I guarantee they're losing money every single quarter. It's just they'll lose $100 million in trading and they'll make 500 million on just front running their clients, or front running because of the information they're getting from Robinhood, or just on fees. And it's like, okay, now that makes sense as to why trading is so difficult. So few people can actually win, but yet they're so consistent as far as their profits. Okay, so let's see here. We've got, looks like 2 minutes. 2 minutes and counting. 2 minutes and counting. Let's go see how markets are moving, if they are. Oh, let me do the screen share. Okay, so futures kind of blah. Oh, here's another big signal. I think oil trading below 60 again, 59.53. When you combine that with what's happening with Target, what's happening with the tightness, the lack of liquidity in the money markets, and I did a story earlier on how Gunlock was talking about that. It's all one and the same. It's all, you go through this cycle and the economy starts to deteriorate, the labor market starts to deteriorate, that makes the tide go out. Then you start to see who's swimming naked. Once you start seeing more and more people swim naked, in other words, more cockroaches, then counterparty risk, perceived counterparty risk skyrockets, liquidity dries up, and then you see it play out as far as interest rates. And then you circle back to the real economy, and then you start to see more and more and more of the news kind of lining up. And if you guys didn't watch that video, Target came out today, or maybe it was yesterday, and reported just is ugly, ugly, ugly. Fewer store trips. The shoppers are looking for deals. Posted third quarter sales decline and cut the top end of its full year earning guidance. I mean, it was nothing but bad news when it comes to Target. But like I said, that lines up with what we're seeing with a lack of liquidity in money markets, and that lines up with what we're seeing with the cockroaches. That lines up with what we're seeing with Jamie Dimon, with Jeff Gunlock, and what we're seeing with Chipotle, what we're seeing with Amazon, what we're seeing with Verizon laying off 15,000 workers. It's all tied together. I think it's all for the same reasons, and that's a decline in labor market, decline in the economy. All right, let me, no, hit the wrong button. Okay, let's go over here and let's go back. Okay, so it is 420. Let's see. Come on. Give me some earnings report. Where's their live feed? This could be a real big day tomorrow because we get this earnings report, plus we get the September jobs. I think we get initial claims tomorrow as well. So I might do like 2 or 3 videos tomorrow. And we got a whiteboard video coming out tonight on the cockroaches. So you guys will enjoy that. Make sure you stay tuned to the George Gammon channel for that one. Well, it's 420, guys. 421. Have you guys, let me go over to the chat and see if you guys have seen anything. Revenue up 22%. That sounds good. That sounds really good. But the key is expectations, right? It was a beat, but they have to beat by a lot. Okay, so you guys all see it before I did. That's funny. I'm the one doing the live stream, the reaction, and you guys get the news before I do. Reports 57 billion earning in Q3. Fake earnings, Santa rally. Okay. After hours, it's up 5%. Okay, that's what I wanted to know. So the market is perceiving this to be very good news. It's a huge beat. Yeah, see, it needed to be a huge beat. Stock is up $10. But this could be a knee-jerk reaction. You know, this is like retail. It's like, I don't know whether I'd fade this or not. I'd be very interested to see how this plays out and what happens at the open tomorrow. And if we get a big kind of jump up due to, oh my gosh, beat, and retail, the Robinhood crowd is like, buy. And the pros are like, fade. That's what's been happening in the past for a lot of different stocks, not just Nvidia. So we'll have to see. Let me go over to here are the numbers. There we go. Finally. Okay, earnings per share, $1.30 versus 125. That's not that much of a beat. What were you guys? I don't know. That's revenue 57. Expectation was for basically 55. I mean, it's a beat, but I don't know if it's a blowout. I don't know. Based on this alone, I'm if it's up $5 or $10 or whatever, I'm not doing it literally, but I would, and this is not investing advice or anything, but I would fade that because that's not. It's a beat for sure, and that's fantastic for Nvidia. But it's weird because the expectations are actually for a beat of expectations. Like you've got to have blowout numbers to impress the market and to really justify. And I think a lot of this goes into their backlogs. So we'll probably see the stock move quite a bit after hours, or at least in the morning, due to what is said on the earnings call here at 5 o'clock. But that's not, I don't know. I just, maybe I'm wrong, but I don't know that should justify it going up 10. I mean, a beat like this, like I said, it's kind of what is expected. It's not like they had earnings per share at $2 and the estimate was 125. Stronger than expected. Yes. Is this the same? Oh, that's the same thing. Okay. All right. So there you go, guys. If you want my base case, and if it's, I don't have the chart in front of me, but if what you guys are saying is true, that it's up $10 or 10% or whatever in after hours due to that beat, I'll take the under as far as the close tomorrow. I'll take the under on that one. We'll see how it plays out. And fading fast, $5 off the top. There you go. There you go. We'll have to see how it unfolds. Now it's only up 3 to 4%. It keeps changing there. I'm reading the chat. All right, guys. Thanks for the updates. Thanks for hanging out with me. And as always, make sure you stand up for freedom, liberty, free market capitalism, which is the complete opposite of crony capitalism, which is what we have been seeing. I will see you on the next video.